Hello and welcome to this 4-part series on funds. As we've been through in previous videos, funds are a really useful way for you as a non-professional investor to invest your money and diversify, maybe have a little less risk and invest in things that you might not be able to invest in directly. In this first video of the 4-part series, we're going to be talking about mutual funds. As you can see here, we'll start off by asking the question and answering it, what is a mutual fund? Then how can you invest in one? And finally, I'll go through an example with all the relevant attributes that you want to look for when assessing whether to invest in a mutual fund. So to begin, what's a mutual fund? This is really simply when fund managers invest on your behalf into a group of stocks or bonds, sometimes both. And funds generally have some themes, sometimes called mandates. It really means what they're focusing on, what they're investing in for you. And I've put 3 random examples, really broad shares of large US companies listed on the stock market, then bonds of, say, African governments, then maybe a bit more specific, bonds and shares of European software companies. So those are examples, but there's anything you can imagine, there's probably a fund for it. So mutual funds generally hold 15 to maybe 500 positions. That's positions being a security, stock or bond. And they do that on your behalf. And again, this is an example of how you get exposure to a really large number of things which you might not necessarily go to the effort of investing in, but someone's doing it for you, a professional. And as you see there, it's often termed active management or actively managed, because every day professional's job is to determine what this mutual fund is investing in on your behalf, and they buy and sell these bonds or stocks as appropriate. And to do this, they charge usually 1 to 2% per annum each year of the amount that you've given them and what everyone else has given them to invest. So that's their fee that they take for the service of investing for you. So how can you invest in a mutual fund? Well, there's 2 simple ways, either with the fund manager directly, and there'll be a bank or an asset manager, and you just have to fill in a form usually to invest, or some mutual funds are available to buy through the stock exchange, so they've actually placed their shares to be available to buy into this fund on the stock exchange, and that's obviously the easiest way because you can buy and sell quite regularly. Now let's go through an example here, and this is a Dutch fund, a mutual fund called Kempen, and they're a fund manager. They have multiple funds, and this particular one is called Kempen Global Sustainable Equity Fund. Now I'm just going to draw your attention to some of the more important things to look for. This is just when you go onto their website, you get what's called a fact sheet. And here it tells you always what the fund does. So it gives you, as it says, and I'm not going to read through it all, diversified portfolio of companies with strict sustainability criteria. So they're looking for companies that do well in what we talked about in the past, ESG screening, and they're looking for companies that will have good long-term sustainable growth. And on the left-hand side, you can see what they say key figures. So the fund size is 113 million euros. That means altogether people have given them a certain amount of money, and that's how much that's worth, that they're actually investing on all these people's behalf into the stock market, into these equities. And it says share class size is also 130 million, and the reason is because you can sometimes have different share classes within a mutual fund, and that's often for maybe non-professional investors that have one share class, and then institutions, maybe pension funds who are investing in this fund might have a different institutional share class, and also whether you're receiving dividends or having them reinvested for you. And we'll go into this in a future video in more detail, but in this case you can see there's just one share class because it's also 113 million altogether for this one, which is the same as the total fund size. You can see the number of shares there are in this fund that you can buy, each share giving you access to their whole portfolio of companies, and they have about 1.4 million, and so you get the net asset value, which is kind of like a share price, which is the total assets or fund size of this fund, 130 million divided by 1.4 million, gives you 80 euros 33 cents. And if you were to buy one share of this fund to give you access to all of their holdings, in their portfolio, you'd pay €80.53, the difference being a cost you have to pay to enter into the fund. It's a slight 20 cent transaction cost. So you can finally see tradability. We talked about some funds are available to buy on the stock market. This one is, it says it's listed and you can buy it through Euronext, which is the European stock market that the Netherlands participates in. And finally, you see subscription/redemption. That means when you can subscribe for new shares or redeem them, meaning buying or selling. You can do that every day, which is great. And finally, you have the ISIN, which is an identifier. And that means that with this code, if you type that into your broker, if you want to buy a share in this, then this will come up with this fund. It's a way of just identifying this fund. Now, a bit more information, and I understand it's a bit of an overload here, but I just want to give you this overview of all the relevant things to be looking for. Because once you really know what to look for, you can apply it to all funds. And once you apply it to a fund or two, then, well, as you can see, it takes a lot of work away from you because you don't have to then think about any more investing. Once you find one, they do it for you, or maybe a few, they'll do it for you. So just quickly looking over the most important things, this is the details of this share class, and as we saw, there's only one share class, so if you buy shares, you can see that's both for institutions and private, and you be a private investor. It's distributing, which means you receive the dividends of their holdings, so whenever this fund's the stocks that they hold pay dividends, you will receive those dividends once a year. They'll collect them for you and give them to you. Then the benchmark is the index, and that's the grouping of stocks that someone else has put together, kind of a benchmark portfolio of world stocks that they're tracking themselves against to see how well they do, to keep them honest, essentially. And you can see it's a world total return index. Then the other important things to look at, it started in 2013, so it's been going for about almost 7 years. It's in the Netherlands, domiciled. You can see they have a Morningstar rating down the bottom of 4 stars out of 5, and we'll go into that in a future video what that means. That Morningstar is a third-party fund rater to tell you how good they are. And then something to look at is ongoing charges. So you can see altogether they have 0.73% they charge you. So as I said before, fund managers charge a certain amount. These guys are on a relatively low side. They charge 0.7%, 0.73% of the money you put in. They'll take that out each year to pay themselves their salaries for managing your money. Finally, the dividends that I mentioned, the distributions, it's the same term on the top right, just tells you how much they paid in the last year to each investor. That was €1.07, and they do it once a year. They pay you those dividends that they have received from the companies that they own on your behalf. Now, let's see what the fund actually invests in a very broad sense. They usually give you a bit of information. It tells you here, the most recent data is the fund has 37 holdings. It's invested in 37 companies. The average dividend yield that we've talked about in the past of each company is 1.9%. The company's size on average is 164 billion, that is. And then the PE ratio on average is 26. Not also important to know. Then the active share, which means compared to the benchmark, which I mentioned in the past, the portfolio of stocks they're comparing themselves to, they have a highly active amount. So 90% means there's a 90% difference between the stocks in this benchmark, as you can see, which includes over 1,600 stocks, and they're 37. So they're not just simply replicating, they're really actively choosing the best stocks, so they say, for you. And that's why if it was 0% for the active share, they'd have the exact same amount as the benchmark. And now we can see the top 10 holdings. I won't go through them all. There's some big names there, and they're companies that they would say rate highly on the ESG scale. So let's see their performance. And ultimately, as an investor, this is something that's of interest. You're putting your money in there and you want them to make a return for you. So this chart on the left shows you in blue this fund, how they've done, and in green this benchmark that I mentioned, a group of 1,600 plus stocks around the world. So they've slightly underperformed, you can see, this fund. but they've still done pretty well. And the difference is they have a more, and it doesn't always mean this is the case, you can underperform, but they have a sustainable bench, whereas that benchmark is just all the biggest companies. So you can see they've slightly underperformed here. They've made, for the last 5 years, 6.6% each year, you can see. They've actually done better than the benchmark over that period of time, making 5, which only made 5.5%, but over the full 7 or so years that they've been going, they've made 9% a year, the fund, and the benchmark's made 10.6%. But it's a pretty good return, as you can imagine, 9% each year to receive from this fund. And finally, we mentioned that their focus is on sustainability, and you can look up, as we've been through in a previous video, how they rate through the MSCI index of sustainable funds. So you look them up, and I put it up here how they do. They rank to their peers, which is all equity funds in the world. They're the 89th percentile, so they do pretty well. They're given an AA rating, which is not specific to the fund, but it's specific to the holdings of the fund. Those 37 or so stocks that they own, they're on average AA, those stocks. So for a fund that's pretty high, and these guys, as you can see, for that reason, are 89th percentile. So this is an overview on mutual funds, and I hope you enjoyed watching the video, and I'll see you in part 2 of funds.